Hello everyone, how's it going? In this video, we're going to talk about Lucid trading under the ticker symbol LCID. It's been one of the most speculated stocks in the past few years. Some have said that it might be the next Tesla. Others are simply betting on a giant bubble that will eventually collapse. Regardless, most people are hoping that this company is going to be the next heavyweight in a burgeoning industry. Lucid is also one of the few EV companies actually having a product rolled out, and as time went on, the company's price action, the investors' hype and hopes went through huge roller coasters. But even till this day, some are still wondering if this is still a bandwagon they can hop on. So in today's video, we will take a look at Lucid and see if the company still has a place in our portfolios. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. Over the past couple of days, I would say that Lucid, who has given us a tremendous amount of hope, has now maybe returned back to normal, but I still want to say that it has still been a very exciting opportunity that has been provided to the market at large. Mainly because it provided many of us an opportunity to maybe readjust the exposure that we had in Lucid. And the other thing is it has reawakened the interest that many have had in Lucid or CCIV years ago. So regarding the current, like the optics, in my opinion, the deal maybe is not completely off, but it's definitely something that's no longer in the forefront. People are now talking about the fundamentals once again, which, by the way, is a very double-edged sword, not only for Lucid, but for the EV industry as a whole. And I'd like to explain why. So basically, if you think about it, what is Lucid? Yes, it's a company making cars, making fancy cars that you and I maybe were not really that interested in in But at the same time, it's a gimmick in which people put in money so that more people are going to put in more money, and so that the people who came before can cash out their chips at the expense of the later ones. That's what we're talking about here. In other words, the future must be better than the present. That's on one hand. And then on the other hand, I would say that the future, the definition of a bright future needs to remain intact for Lucid's market cap to increase significantly as the sales volume goes up. So recently there has been an article saying that Lucid is now entering into the pricing war with Tesla and probably with many other companies as well, because the economy is doing poorly, because the number of people who can afford to pay those fancy cars has decreased. Or it's either that, or they want to enter into the entry level bracket as well. So personally, I'm not entirely convinced that this is necessarily a good idea, just because it's not that we don't have EV cars, right? We just need better EV cars. Or rather, the shareholders need to see that Lucid serves a segment of the market that is, one, large enough for everyone, and two, is very wealthy. So I think that this is one of the potential pitfalls of Lucid going forward, in the sense that if they start bidding lower and lower in prices, then this is going to hurt the profitability of the company without necessarily increasing a whole lot their sales volume. And the other thing is, if we start to talk about, we got to pay attention to the vocabulary used here. If the company starts to focus a lot more on deliveries and no longer on the PowerPoint sheets, yes, of course, this is better for the economy, but it may not be the best thing to go for the shareholders. Shareholders want to see their shares being pumped up, right? But if we start talking about the deliveries, the the productivity, the production levels, and this and that, then Lucid would sound a lot more like a conventional car manufacturer who is not, really not, valued at the same level as Lucid or Tesla, right? So if we follow this kind of logic, is it going to be a matter of time before people start to tweak around the formula to calculate the value of EV companies? You see what I mean? Because previously we've been saying that, Tesla is worth a lot because, well, one, it has the brand image, but two, because they have a lot of new technologies. I don't remember Lucid ever having that sort of technology as an emphasis in their development plan. So this is why I would say that going forward, we need to pay closer attention to Lucid and to hopefully see that a company will be able to take out, make the best out of the situation and to maybe not lose too much money in the process. Because we know that right now they are making a lot of cash inflows, but it's still not enough to support the entirety of the operations. Whereas once they do, then maybe it's going to be different. But for the time being, I would say that hopefully the market will remain as optimistic about the industry altogether, and they will not change the way they look at EV companies. I think this pricing war is probably the last thing we need. But then again, a recession is also something that we don't need. Same goes for very low sales volume. But by then, I would say that it's possible that Lucid's shareholders are going to manifest their dissatisfaction. Lucid is an EV manufacturer that is poised to shake up the industry with the cutting-edge technology and designs. While other EV companies have been making strides in the industry, Lucid Motors stands out with its advanced battery technology, aerodynamic designs, and commitment for sustainable business model. So, in addition to the advanced technology and design, Lucid is also committed to sustainable business model by using the renewable energy sources to power the production facilities and wants to reduce its environmental impact throughout the life cycle of their vehicles. This commitment is what separates the company from other competitors, in my opinion. Another factor that makes Lucid Motors standing out is the focus on luxury segment. The company's first vehicle, Lucid Air, is a vehicle that is spacious and comfortable, coming with advanced drivers, assistance systems, and many other luxury features. When we look at the long-term tendencies of Lucid price action, it's not hard to see that the bubble that gave so much hope to traders around the world is now bursted. The market is no longer willing to blindly follow the latest hype, because on one hand, the market doesn't want to persist on believing that a beautifully made PowerPoint is better than a good financial report. On the other hand, it cannot afford to sustain the trend when supply chain issues, doubt over flagship companies within the sector, conflicts around the world, higher interest rates, and a looming recession have already been plaguing the real economy out there and also the narrative. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for the next couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that has investment value in the years to come. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reasons, they may still last for a very long time and bring the price to very low levels. Hyliion and PaySafe are excellent examples in that case. Lucid had a strong financial performance in 2022. The company reported revenues of about $200 million in Q3 of 2022, a significant increase from just $232,000 of revenue in Q3 of 2021. This strong revenue growth was driven by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. The Lucid Air is a luxury electric vehicle that has been well received by consumers and that has helped establishing the company's reputation as a major player in the sector. Currently, they still have a negative net income, mostly caused by the fixed costs and other operating expenses that should be absorbed once the volume starts to pick up. Overall, Lucid's financial figures paint the picture of a company that is growing its operations but lacks a little bit in discipline and cost control, needing to scale up the operations to start having positive cash flows. Now, let's also cover the shareholder composition in Lucid, because this is a very important factor to determine if the company is better for trading or investing. Lucid is currently held by the institutional buyers for the most part, at more than 70% of the total float. This suggests that the price volatility of Lucid will be lower than other growth stocks, mostly owned by retails. The reason why this might be the case is because institutional shareholders have far more diversified portfolio and can afford to wait, so they don't mind the short-term volatilities. They also tend to stay in for a longer period of time, which is also a good sign for those of us who want to stay for the long run. Some key behavioral differences between institutional and retail shareholders include their investment horizon and also their level of involvement in the corporate governance. In other words, institutional shareholders tend to behave as if they own the company for real, that they are the ones deciding what is going to be the company's decisions, whereas the retailers tend to just behave as speculators. We come in and we aim to make more money than when we first entered in the stock, and this is the end of it. They don't see necessarily like the potentials of the money that there is to make 5 to 10 years from now. Whereas people managing other people's money can sometimes have this kind of opportunity to wait. The short interest of Lucid has been increasing in recent weeks, meaning an increasing number of investors are wondering whether it's a good time to sell the stock. Short sellers borrow the shares from brokers and then they dump it in the market, hoping to buy them back later at a lower price and making the profit from the difference. In the case of Lucid, there is a significant amount of short selling, but in my opinion, it's not sufficiently significant to say that there is a concerted short operation going on against Lucid. So I would say that this has to be put as a secondary reason at most. It's important to note that the short interest may not guarantee a short squeeze, but nevertheless, it's a metric worth monitoring. It's also worth mentioning that people shorting the stock often have a good reason doing so, and that a short squeeze may not happen regardless of how many stars are being aligned. So my recommendation regarding Lucid remains unchanged overall, and that is that if for the short term the deal doesn't go through, then we return to wherever things were before, and we slowly build up a position that's going to go through multiple months and maybe above a year, so that at the end, once the stock blossoms, we're going to be largely compensated for our patience and our perseverance. I would recommend to commit a maximum of 3 to 5% of your portfolio capital into Lucid.